Hi, everyone. Welcome, welcome. I am excited to do this because I think it's important to talk about what is going on in our market right now, because it's crazy. It's crazy out there right now, and we need to talk about it. So I'm super excited to have somebody I've had on my channel before. He's a lender and he watches this stuff kind of like I do. And so we're going to talk about what's going on in the market. If you guys have questions, of course, make sure you put them in the chat and we'll answer them. But let us know where you're from and how we can help. So here is Matt. Hi, Matt.
Afternoon. Great to be with you, Sean, as always. Thank you so much for the invite.
I know. You're welcome. You're welcome. I mean, Happy New Year, all those things.
Happy New Year. Yes.
Yeah.
It's positive vibes to a good 25 here. Last year was not the easiest year for the mortgage industry. So,
well, I don't think it was the easiest year for anybody, but we push on.
Probably not. Yeah. Fair.
What's crazy, I was talking to somebody about it the other day. What's crazy is that so many people thought that last year was, oh my gosh, it was bad. There wasn't any inventory and what's going on. And honestly, the volume, the number of sales that we had last year was better than 2023.
It is. And especially when you look overall at like appreciation in the Valley, right? Like obviously, for Phoenix, like Paradise Valley is going to be different than Maricopa or Queen Creek. But if you look at everything all together, if appreciation is pacing alongside inflation, that's a pretty healthy market. And
right.
Quite frankly, if we always paced at that speed, we would never have any booms or bust. It would just be nice, steady eddy, right?
But then everyone would complain that what's going on? Why am I not
right? Why am I not making 20% returns on my real estate portfolio this year?
Right.
Yeah, exactly. No, right. It is surprising, but again, obviously a lot of media tends to be doom and gloom anyways, right?
Well, that's how they
want to focus on that. So
right. But with that, I wanted to talk about an article. I'm going to pull that up here. That was out in realtor.com. Speaking of, says deep freeze hit the housing market in December with the strongest seasonal slowdown in 2 years. Now, this is national. So just remember that. Right. We're going to show you some numbers that are more local here to the Arizona market, because just because you read this, it doesn't always mean two things. It doesn't always mean that it's the truth, especially when you get down to the end, because they'll usually flip it and all of a sudden be like, but it was a really great year that, no one saw coming. And two, it's really local to where you are. So it depends on what state, what city. It can even go down into the neighborhood. Like Matt was saying, like Paradise Valley is going to be different than Scottsdale, which is going to be different than Glendale or Gilbert, or, all the different places. So it's just interesting. So let me get down in here a little bit more. Yeah, again, a lot of times that this article is blaming interest rates, which we all know that plays a big factor. So it says the glacial pace. Sorry, people are noticing now that I'm wearing glasses because I can't see when I'm reading.
That's why I'm supporting you. I'm wearing mine. I don't need them, but I'm wearing them to support you today.
Thank you. Thank you for your support. So it says the glacial pace of home sales came down due to higher mortgage rates, which rose to 6.85 for the week ending December 26th, according to Freddie Mac. This has kept potential buyers firmly on the sidelines as they I read this earlier and I was like, is that really a word? Their time through the fall and early winter months. That's despite the median listing price edging down about $15,000 since last year to $402,502. We find that high mortgage rates continue to bring a slow market, with December 2024 being the slowest December since 2019 and the slowest month in nearly 2 years, says McLaughlin. They're talking to a specific person. So here's the interesting thing about that. And again, we'll get into this a little bit more. Our December, just this last year, was better than 2023. Not just talking the year, our entire December. It was pretty drastically a lot better than 2023. So this article kind of goes on. I mean, it shows you the days on market, right? Homes are staying on the market longer. And it's hard, I think, when you're talking with people, sellers specifically, and they're saying, well, how long is it going to take to sell my house? I feel like they got really used to how fast everything was selling a few years ago.
Right.
And that was not reality.
No, it's not. And one thing that I was speaking earlier, I didn't even think about bringing up is I'm surprised they also didn't factor in that this is an election year.
Right. I thought the same thing when I was reading this article.
So if you think about it, when you're looking at December closings nationwide, not just Arizona, if you're looking at things nationwide, to have a December close means it went under contract in October or November, right?
Mm-hmm.
And the election, I think it was November 6th or something like that.
Second.
It was early November. I remember that. So historically, you can go back like 30 years, 40 years. And what typically happens is November, if you go back year over year, November in election years, the amount of closings usually is less.
Mm-hmm.
But here's the interesting thing about it is, although because people are uncertain about elections, whether their candidate's going to win or not win, although there are less transactions, there is data to show that those people, they still ultimately bought or sold what they were already going to do.
Right.
It just now until December, January, February to do so. So the fact that Phoenix had a great December,
right,
in spite of that lull, it's kind of like the pandemic, right? When there were 3 weeks, 4 weeks where no one did anything.
Right.
We're like, the world's ending. We're not buying, no one's buying a home and prices are going to crash. And all of a sudden we went like this.
Right.
So it's kind of the same concept where, the markets, people are going to do what they're going to do. It just, they may have delayed it.
Right. No, I 100% agree, because in October and even in November, it was slower. But like, I had somebody right at the end of December, right at the beginning of December, go under contract. We did a 2-week cash close. It was fast, and they were closed before Christmas.
Yeah.
So
they probably got a good deal, a fair deal.
Well, that's the thing, right? We talk about that all the time, that really the best time to buy in any market, buyers or sellers market, the best time to buy is fourth quarter.
It is.
Yeah.
It is. I saw some nice concessions on a couple of my transactions. And if you talk to our best housing analyst in Phoenix, Tina Tambor of the Cromford Report, she will say, if you need to buy, the best time to buy is right now.
Right. So I will put my glasses on and keep reading, because I think that something else in here is interesting. Like many home buyers, sellers also took a breath last month, with just 0.9% more homes newly listed on the market compared with last year, and down 2% from November. On the plus side, the number of homes under contract but not yet sold continued to rebound in December, increasing by 7.4% compared to last year, but it was still nearly half of November's 14.7% gain. Let me find this one right here. Let me get it. So, however, some relief is expected in the new year in the form of marginally lower rates. We now know, especially after today, that's probably not happening. Well, not probably, it's not happening. The Realtor.com 2025 housing forecast projects that mortgage rates will average 6.3% across 2025 and end the year at 6.2%. Economists at Realtor.com predict that both the slightly lower rate and the time will chip away at the lock-in effect. We talk about this a lot. Homeowners' unwillingness to list their property due to their current low mortgage rates. And so, again, we talk about this a lot. Again, back to the interest rate, right? We now know, especially after the jobs report that came out today, like the likelihood of the interest rates coming down, not great right now.
Temporarily, yes, it's fair to say. And I think if there's one thing that we've learned, especially in the last 5 years, is that no one knows.
Right.
Everyone, not poking at Fannie or Freddie or Realtor.com or Zillow or especially Goldman Sachs, they have no idea. They really don't. And today you have to understand is that those jobs reports, a lot of it is based off of proprietary algorithms.
Right.
And we gained 256,000 jobs instead of the 160 we expected. But the big blow to the bond market was unemployment dropped from 4.2% to 4.1%. And it was a strong job report all the way around. Like every sector had job growth.
So did you hear Tina most recently say that I can't remember who she said, but there was somebody out there that has already predicted into like 2026 that they expect the jobless rate to stay at like 4.3 And she said that we're already at 4.2. So to know that it's gone down to 4.1, I mean, it's just, she's like, you can't predict that far out.
It's temporary. And what happened to us last year was we got a amazing jobs report from December of 23, and that caused a jolt where rates to rise. And then the next month in February, we got the January report, and it was all corrected, and we saw rate improvements. And then sometimes you have things like seasonality, temporary jobs that kind of can skew the numbers.
Mhm.
But remember, when we're talking about rates, we're not just talking about unemployment. That is a big driver. We're also still talking about the I word, which we've been talking about for years. Inflation is still a big deal. Inflation is still on the way down. The Fed's target of 2% in 2025, it may be a completely unrealistic number that we are never going to get to. And remember that Chairman Powell is not a trained economist. And most of our Fed chairs have been trained economists.
I don't think I knew that, to be honest.
A lot of people don't know that. I'm not saying he's just not a smart man or anything like
Yeah.
that. I'm just saying he is not a trained economist. And, there are certain things the Fed has done. For example, they said they wanted to lower rates, yet they were flooding the market with more treasuries, and they are not holding on to any of those debts. They are unwinding them, which it's kind of like if you're trying to lower rates, it's almost like you're hitting the gas in your car and you're stepping on the brake at the same time.
Mhm.
It's just not it's not conducive to a lower rate environment. And maybe they just feel like they have bigger fish to fry, and that lower mortgage rates are just not super important to them right now. And as we've clawed around in the industry the last 2 years, as we've used levers like 2-1 buy downs, things like that, temporary buy downs, to make housing a little more affordable for folks.
Right. And I mean, I just was talking about the 2-1 buy down, or the rate buy down in general. And I think it's a great tool to use. I just feel more recently that I'm hearing people kind of throw that around kind of willy-nilly, but not giving the whole truth to it. Right.
Right.
So I always tell people, I'm like, the rate buy down can be a great tool, like I just said, but you have to know that one, and Matt being the lender, like, just correct me if I'm wrong in some of this, but one, they have to still be approved at the highest rate.
100%.
Yeah.
Yes. And really, this is all about setting expectations, right?
Yeah.
Saying, this is what I project. This is what I think. This is what historical data tells us, is that rates are going to eventually fall. But yes, you're qualified at this rate. This is your worst case scenario. It can't go higher than this. But
Right.
that starts at month 25 on a 2-1 buy down.
Right. And then also, everyone's like, oh, the rates are going to come down. Well, again, we don't know where they're going. So in the grand scheme of things, are rates going to come down? Sure, eventually. But if you only do a 1-year buy down, you might pop back up to that higher rate in that year.
Right.
And now you have to be able to afford it. Or even after 2 years, what if the rate doesn't shift enough to make it worthwhile for you to refinance? So you just have to know that. And then, it's that whole thing of, you just go refinance. It's fine. It doesn't cost you any money. Well, you don't have to maybe bring money to the table for the close, but people have to get paid to do these loans.
Correct.
And that just gets put onto the principal balance.
It's still out of your equity. You're absolutely right. There's still a cost of doing business.
Right. So, I mean, I think it's a great tool, but I just think that you really have to think through it and talk to a lender about all the scenarios to see what is the right thing for you.
Yeah. One of the big misnomers that I learned a long time ago in this business is, when you're talking about a lot of these reports like inflation, you have to remember that when this big headline comes out, all they're doing is they're looking at what the percentage was the last 12 months. And each month, all we're doing is replacing the oldest month. And it's a new month. So all we're doing is averaging it out. So the reality is, this first quarter, the actual inflation for the month of January 24, I'm still getting messed up.
I know.
January
25.
24, February 24, March 25, those were all big numbers. So even if we have like a somewhat moderate number for these next few months, it's going to look like inflation is all of a sudden so much better. It's just, It is, but if you look at, that's when you start looking at 3 month, 6 month, 9 month increments of inflation. And that's why a couple of months ago, the Fed was so confident making the cuts, because they could see in the short term, we're making progress, but we have stumbled a little bit at times. So inflation and unemployment are still the two big things. And, obviously not to talk politics, but it will impact mortgage bonds is when new president takes office on the 20th, I believe. You have to know that there are things like economic policies like tariffs, imports, immigration. There's going to be a lot of things that the policies are going to have either a positive or negative impact on mortgage rates.
Right. Right. And I mean, some of that's just yet to be seen.
Yeah. And then going back to that article for a second, if you don't mind popping that up.
Yeah, for sure.
The other interesting thing that we've been talking about a long time too, back in the days of locking myself in my room and locking refis in 2020, 2021, when everybody got a 2-3% interest rate, is we talk about the lock-in effect. But the thing about the lock-in effect is, for a lot of folks, sure, maybe they can not do anything for a year, 2 years, maybe 3 years. But at some point, people have to move on with their life, whether it be a first-time home buyer. A lot. I've done several, helped several folks lately that their kids have left for college, graduated. It's time to downsize, things of that nature. A lot of them can only wait so long. So I think, like Tina Tambor talks about too, she was talking to an analyst, economist from New York, and saying the same thing. Like, at some point, we can keep talking about we're waiting, but maybe not in our history. I don't know. It feels like in some ways we have so many types of buyers and sellers that have been sitting on the sideline at the same time, when usually we have a few sitting on the sideline at the same time.
Right. And this article does get into that. I was just looking to see if I could find it really quick. But they did start to say that, the locked-in effect, it's there, but at some point they do move. They end up moving. So it is interesting. And I feel like I'm seeing that, I'm hearing that from people that said, I was waiting, and I'm not going to wait anymore. We've got to do something.
Right. And then you have a lot of folks too that, again, like we talked about at the beginning, is people in our area have tons of equity in their home. I mean, Arizona has been, I don't know the numbers, but obviously one of the best places that you could invest in real estate in the last 25 years.
Agreed.
So people that have a ton of equity, you also, as a mortgage planner, I'm looking at the whole picture, right? How much money is coming in, how much money is going out. And you have a lot of people that might have that lock-in effect of that 3.25% rate. And I've talked to several of those people in the last couple of months where they're like, okay, I love my rate and it's great, but I've got kids that play whatever, travel hockey. I've got colleges. I've got 60 grand of credit cards. And I look at the whole debt consolidation. I'm like, it still makes sense to, maybe if you do sell, you can get rid of all those things. And yes, you're going to have a higher mortgage payment, but at the end of the day,
overall, you're still saving money.
It's going to be pretty similar to what it was.
Yeah. Well, and it's funny, I was talking to somebody this morning that had been in real estate for a long time as well. And it's, yes, where interest rates are at 7+%.
Yeah, 7.25% today.
Yeah, it doesn't feel great right now.
No, it feels
because of where we came from. But I often tell people, like, when my husband and I bought our first house, we were at 7%. And my father-in-law looked at us and said, lock that rate right now. You're never going to see rates that low. I can't believe you're getting that rate. Oh my, he made a really big deal about it. And we were like, okay.
Right.
And, now it's that, oh my gosh, I can't believe the rates aren't 3%, and so, yeah. And the argument, right, that I hear often is, well, but the home prices weren't as high. Agreed as well.
Yeah.
But and they want to, there's that push pull right now. Yes, the home prices weren't as high, but wages are higher. And then people want to argue about, but wages aren't high enough to support the home prices. And that's a tough one, right? Because I think that what people I think the overall wage, and we've talked about this with Tina, the overall wage reports that are out there are incorrect.
Yeah,
Wages
a
are
lot of
actually higher than what a lot of people realize.
agreed. A lot of analysts like Barry Habib, MBS Highways, talked about is if you look at overall wages, wages are up significantly the last several years. So it has been able to somewhat combat inflation. Now, people are not feeling that at the grocery store,
Of course
right?
not.
Not really feeling at the gas pump. I know people are still used to that. So yeah, I mean, I think that it's inflation. We're still feeling it. We're all, even if inflation stopped today, all it means is how much more it's increasing. It's already increased so much, right, in the
Right.
last couple of years.
Right. Well, I want to share, we talked about this. I want to share a few of these reports here, specifically for Arizona, because I know, I mean, we can talk general about, what's going on
Right.
nationwide, but what's going on here? So these are some interesting statistics. And if we need to get in the Cromford report, like we talked about, we can do that. Let me just add this up here. So sorry, my phone, I thought I had this unconnected. So this really shows you the number of sales per price range. And this is really interesting, I think, to look at because as we talked about it, right, nationwide and then state and then city and then neighborhood, but it also really functions in price points.
Yeah, and it's super interesting that when you go in the super luxury, I mean, look at that number.
I know.
Absolutely insane. Almost 60% increase of homes over 3 million.
And that was just
Who are
from
these
last
people?
December to this December.
Yes.
I know.
Yeah, 47 to 75.
Right. So this just shows you the number of homes that have sold. And overall, right here, I mean, just for December, the difference, taking every price point into account, we were at almost 13% more solds.
Right. And for people that are looking at this chart for the first time and you say under 300,000, why is that number -6? It's because homes are going up in value, becoming a
Right.
much bigger challenge. Those $300,000 homes are now 400,
Right.
under 300 are now over 300.
Right.
Because we are still seeing healthy appreciation and we have a complete lack of inventory at that lower price point. And you're not seeing new build construction homes anywhere close to the Phoenix metro area being built under 300,000.
Right. So it's funny because I have clients that are, looking to move here and their price point is, maybe 6, 7, but they want new construction. But they want to maybe live in Scottsdale or even like I've got one that they would be okay with like Gilbert or Chandler, places like that. And they really want me to talk about new construction with them. I'm like, but they want space, right? They don't want to feel like they're on top of one another. And I have this conversation a lot. It's not that you can't get new construction in Scottsdale. It's really hard to get new construction in that price point. You can't get it. In Gilbert and Chandler, it's really hard to get as well. And part of the reason for the size, right, the land size, is because our land is so expensive. So when developers bought the land, they had to figure out what the land plan looked like and put something on that land that was going to make their margins were okay. And oftentimes that is not a 3,000 square foot single level with a lot of space on the side if they only have a specific amount of land. And if they do that, guess where the price goes of those homes? To 2.5 to 3 million.
Yeah, it's crazy. And not just the land. I just helped a couple in Tucson in the foothills, nice area, and they bought a home for 3.5 million. And before they did it, it was an existing home that was only built 5 years ago. They went to a guy and basically he factored in the land and the construction. It was going to cost about 50% more than the acquisition to buy existing.
Wow.
I mean, it's crazy.
Yeah, that is crazy. It's that's the conversation I feel like, yeah, like I've been having a lot lately with people. Just where can they buy? And they don't want something that's old because they don't, the old always constitutes, then I'm gonna have to replace the roof and the air conditioning and all of that. And I always tell them, sometimes you will, but not always. And so you can look at those homes that are a little bit older, and as long as they've been well maintained and some of those things have been, replaced, I still think it's an okay thing. But the reason that you can't get that is just because we just don't have any land. I mean, the only place that I know in North Scottsdale where there's any building and construction is up past Troon, up at Story Rock and Sereno Canyon and places like that. But there's a lot of new construction in the outskirts, right? And so that is where that's where a lot of that new construction goes. And I'm going to bring up our Cromford Market Index. So I talk about this a lot on my channel. So the Cromford Market Index looks at where we kind of are: seller's market, buyer's market, balanced market. Anything above 110, we're in a seller's market. Between 90 and 110, we're in a balanced market. Anything below 90, we're in a buyer's market. And for a while here, towards the end of last year, I would say October, November, we started having a lot of red arrows. And you'll see this chart when I pull it up here. We had a lot of red arrows where things were starting to shift in the favor of the buyers. In fact, we had a lot of cities that were in buyers markets. And in December and in January, it started shifting.
Mm-hmm.
So here is January 2nd. This is January 2nd up here. And so you can start to see, and I mean, some of these shifted in a big way. Now, January is the beginning of our season.
Yes.
So it's normal for us to start seeing more activity, but I got to be honest, I don't usually see it January 2nd.
Yeah. And if you look back historically, post housing crash, of course, usually when we enter briefly into that buyer's market, it's not for a long time.
No.
They're usually for a short period of times. And yes, as we are now in 25 and we're hitting our soon to be seasonal selling period, you're seeing more inventory, you're seeing more buyers. And that's why we've been talking, especially to first time home buyers, till we're blue in the face. Like, now is the time. Now is the time. Now is the time. And
well, go ahead.
I was going to say, and because you're talking about like roofs and ACs, like I can't recall, it's been a while because we are in a fairly balanced market in a lot of places where you can call a seller out right now and say, hey, needs a new roof. Hey, needs a new air conditioner. I've gotten sellers to do both on homes in the last 2 months.
Well, that's good to know, because I always tell sellers, if you have an old roof and an old air conditioning unit, I would personally replace your roof. I would leave the air conditioning units. I would get them serviced and make sure they're working. But all day long, a buyer will cancel a contract if your roof needs to be replaced and you won't replace it. If the air conditioner is working, then we can probably get it by. They're not going to love it, but I've never seen a seller replace an air conditioning unit. Roofs all day.
Yeah, well, I don't know why that is, but I agree. It's just the roofs are a big topic.
Yeah. But
it's also early in the year too. We're not in June.
Right. True. But so, I mean, just look at some of these numbers. So again, this is January 2nd and I have January 9th. So we'll kind of compare this a little bit. So if we look at, Chandler has been on the top of this for 2 years.
Mm-hmm.
And people always go, why? Intel is really the reason. Yeah. Intel is huge. And so it brings a lot of people, and Chandler's a great place to live.
It is a great place to live. And they've done a great job, the city and Governor Ducey, of hiring these folks that came in and did business development to bring in so many high-paying jobs that require degrees or master's degrees. And that corridor off that I-10 has a lot of, like you said, like great companies where people are making six figures.
Mm-hmm. Mm-hmm. But I mean, they jumped from December to January 1st, 14 points. Fountain Hills jumped 17. Paradise Valley jumped 30.
Yeah.
Tempe jumped 24. Scottsdale jumped 12. So the only two cities that went down were Surprise and Maricopa, outskirts of town.
Yeah, outskirts.
And here we, from Goodyear, Surprise, Queen Creek, Maricopa, and Buckeye. Those all of those are in a buyer's market, and they're all on the outskirts of town.
Yeah, and also you have new construction in both
that you're competing against
and Buckeye competing with.
Right, which that's the thing that we should say. Yeah. Sorry, that's the thing that we should say, that this does not take into consideration new construction. This is just resale.
Right. But obviously, and the resale impacted as well, probably by the new construction. But yeah, I've heard of some incredible deals that people could get if they are looking for that entry price point in the outskirts like Maricopa and Buckeye.
In new construction or a resale or both?
Both.
Yeah.
There's areas that might consider like 3-2-1 buy downs.
Yeah.
In Maricopa.
Yeah. I have a client that's under contract on a house new build out in Surprise right now. Lot premium, we got them to cut the lot premium. We got them to increase their incentive budget that they would pay for. I mean, we got them to do quite a bit.
Yeah, that's awesome.
Yeah, and I've got another buyer that I'm taking out to Queen Creek, a couple buyers I'm taking out to Queen Creek for new construction, just because, again, that is where you can find some new construction that are really nice. The homes are beautiful. The community is great. It's expanding, and it's changing a lot. You've got employment corridors that are around there. So it's not like you're going to have to drive forever to get to wherever wherever you work.
Yeah.
So I'm just going to pop up January 9th here. So again, Chandler at the top, 16%, Fountain Hills 13, Paradise Valley 30. I mean, this is a week change. But again, Surprise and Maricopa are the only ones. So the interesting thing too, when you look at the overall Cromford market index, just the dials that we talk about, I was talking with Tina on Monday, and on Monday it was like 90.4. And I was talking to a client yesterday, and I went into the Cromford market index to look at something, and it was 91.4. And I was like, it went up a whole point in 4 days.
It did.
That Cromford market index does not move that fast.
Yeah. And just want to point something out that maybe blinding flash the obvious here, but not all real estate agents are created the same. And it is so important that you work. This is like a subscription service, proprietary data. Like, it's so important that you work with somebody that is watching on a daily basis, because that is how fast real estate can flip. And whether you're on the buying side or selling side, you have to hire somebody that knows exactly where, because that's a current indicator, right? And you got to be on top of your current indicators to know who has the upper hand, buyers or sellers. And that's really what that Cromford market index is all about.
Yeah. And I was talking with another client of mine and looking at buying something, and the people bought it the house 2 years ago. They paid $800 for it. It's listed a lot higher. And so we literally were digging into the Cromford market index to say, okay, from 2022 to now, what is the appreciation? The appreciation was 10%. So we had to okay, so let's increase the price point by 10%, but now they've done upgrades. So it's like, because it was a custom home and it's smaller than the normal houses around it. And it's like, how do you figure out what the price is?
Right. The classic question is, they want every dollar out of their upgrades on top of
course. Right. Every seller's like, I spent $1 million on all of these upgrades. Can't you tell? And the house is adorable. It's cute. They did a great job, but it's like, for a buyer, it's like, how do you justify the price? How do you figure that out? If you don't have real comps to go off of, and in the custom world, it gets harder, because you don't have, this is the same floor plan. Look at the differences in the finishes. It's different.
Well, and that's why it's easier, if you're reading the data, to be closer to the mark and be an expert in the Phoenix metro area, because of how, we have so many homes in small areas and a lot of tract homes.
Yeah.
Go up to Northern Arizona, go to Boston, go to all these places where like everything is so different and it's really hard to comp out, At least we have that benefit here.
Right. Okay. I'm going to pull up another chart here that we were talking about. Let's look at the appreciation. This is an interesting one. So this shows the median sales appreciation. Hold on. There we go. I couldn't see you anymore. So this shows the median sales appreciation overall, right? So from year over year right now, from December to December, we're at 4.8% year over year for the median sales price, which I think is pretty good, right?
Yeah.
It's not, everyone wants to look at this, go, oh my gosh, we lost, because this was the peak. This was May of 2022. Then our interest rate started to increase, and then we started to do this, and everyone was like, oh my gosh, here it is. This is the crash. It's coming, it's coming, it's coming. And then we took a pretty steep, we kind of came out of it.
Yeah.
And since then, we've been steadily increasing.
And again, it's recently in the last 12 months, it's more than inflation. So,
which is a good thing.
It's a good thing.
Sorry, I got thirsty. But then this is the interesting part, because we were talking about the luxury.
Right.
So here is what it looked like when you take out homes that sold over 3 million, which is 98.6% of all the sales. So the homes that are selling over 3 million is a very small portion of the market, but it skews the numbers pretty drastically.
Yeah, it does. When you're talking the homes over $3 million, that'll change the numbers quickly.
So when you look at this, right, you go from December year over year, we're still still 3.5% increase.
Yeah. And take that over 10 years, right?
Right.
I mean, that's a pretty healthy investment. Your house goes up by a third, more than that.
Right. Which is really good. So I just thought those were interesting because, people hear sometimes that talk about luxury and they're like, well, that's a different animal. And that just takes it, it changes everything. And it does, but this shows you the difference. I mean, it's not, what was that, a point?
Yeah. And that's what's great about, power users of this service like you, is because you can look macro to micro, right? You can look overall Phoenix Metro, and you can drill down to zip codes and price points and really get granular with this data.
Right. I sometimes I have to take myself, I have to walk away from it because I get a little like, okay, then if I go here,
it can be a little overwhelming for sure.
It's a little overwhelming. It is. It is. So Matt, what else are you seeing right now with the mortgage rates and just any other programs or anything like that you're seeing that can help buyers, sellers, anything?
I think our industry is in a very interesting position. You've seen a lot of companies go out of business. If rates stay elevated, I think there are more potential retail mortgage companies that are going to go under this year.
Mm-hmm.
The number of originators has decreased significantly the last few years. And there are plenty that remain licensed, but are only originating, a loan a quarter, 3 loans a year.
That means that means that they're only doing
the number of loans they're writing is nominal.
Right.
So these folks are going to have to figure out how to stay in business. So I think you will see more alternative loan programs coming into the fray. There's already more options for folks on like the closed-end second mortgages or credit lines. You've seen a lot of that the last year. You also see a lot of called non-QM, which are non-qualitative mortgages, like DSCR loans, for example, where your down payment just has to make sure it covers whatever the actual payment would be on the mortgage. So it's like kind of non-income qualifying. It's qualifying only based on the property. I've been doing this for over 20 years, and I did more DSCR loans last year than I've ever done.
That's interesting.
That's kind of a newer product.
Mm-hmm.
Maybe it's an easier loan to do than like a bank statement loan, because a bank statement loan, your qualification is always changing. If you look at homes for a month, and guess what? Oh, we need your next month, the bank statements.
Right.
The DSCR loan's like, hey, how much is rent going for on this house? It's going for $2,000 a month. Okay, great. That means you're going to have to put down whatever.
Can you do a DSCR loan on a primary residence?
No, it's
I didn't think so.
For an investment property.
Yeah.
But some people, I have done a few 1031 exchanges. Some people might want to take advantage of how much equity they have in their property right now. And if for some reason they're not able to income qualify for whatever reason, you can always take those proceeds and get yourself a bigger property or a different area. Like, for example, let's just say you had a home right now in Maricopa, but you own it outright. Well, maybe you might want to turn around and do a 1031 exchange and move that money into a house in Chandler that has a small mortgage on it or something. Mm-hmm. That's a great product. The jumbo product, there's just not a lot happening right now. Surprisingly, like for 10% down jumbos, things like that, those are still not back. But
what's the interest rate difference you see on a conventional to a jumbo?
Jumbo loans, I would say on average have been a little bit higher, maybe at least a 0.25%,
Mhm,
not significantly higher, but higher.
mhm.
Um, we're having to get creative on a lot of these deals for folks. I mean, it's just, whether you're in the entry level or luxury, everybody has overhead that, they're not
Right,
accustomed to. People that were accustomed to a $3,000 mortgage a couple years ago would have been fine with it, but they don't want a $5,500 mortgage, they
right,
want a $5,000 mortgage.
right.
And so, it's going to be a problem that we're going to be dealing with, it looks like, for at least the first half of this year. Um, there's a website you can go to called the CME Group, and they project what are the chances that the Fed's going to cut at the next meeting?
Do you wanna
So,
pull that up?
oh yeah, sure. So for January 29th is the next meeting. Um, let's see here. And you can see there's only like a 2.7% chance that they're going to cut rates at this next meeting. And then, because right now, the Fed funds rate is at 450 basis points. So that means prime, we hear prime related to, your credit card rates or small business loans, things of that nature. It's 3% higher than the Fed funds rate. So your prime is like 7.5. So even when they meet in March again, right now the projection is not significant, 24.4% chance. And then we get to May and it starts to go up a little bit. So it really looks like we're not going to, at least from the Fed speak and the policy, get a lot of help with rates for the next few months. So where we're really going to have to get help is going to have to be from these other things.
Well, and I think that I see it a lot, like in MLS, that sellers are willing, if their house has been sitting on the market too, they're willing to participate maybe in doing or helping with a rate buy down.
Right.
And I mean, and again, in the Cromford report, we can see like how often do seller concessions come into play, and there, what was it? I think it was like 52% of the deals that happened in December all had a
High
concession of some sort.
concessions. Yeah. And we've been
Yeah.
hovering around that 50 to 54%
Mhm.
mark.
And
Uh,
the dollar number is like $9,600.
oh, it was higher than that not that long ago. It was like 10.5 maybe
Yeah,
a month ago. So yeah, call it 10,000. And that's for everything, right?
right.
Um, and when you get to that higher price point, even those will have concessions. I think sellers are getting the message that concessions are an expectation. And I also think sellers are getting the message that although we had all these nonsensical lawsuits, um, realtors do a job and they get compensated for doing a job just like anybody else that goes to work gets paid for doing a job. So it is an expectation, just like before, where real estate agents on both sides of the transaction, they get paid and expect something in the form of concessions to alleviate that, higher interest rate environment.
Yeah, yeah, and what's interesting to me is when you look at list price to sales price, and we talk about concessions. So in the price points, I would say below 1,000,000, maybe even below 800. That's where the bulk of them are,
Yeah.
the actual concessions. But when you get into that luxury price point, where you see that list price to sales price ratio, where in the price points we were just talking about, your list price to sales price might be like 98, 97, 98%. But when you get into the luxury market, you can see the list price to sales price at like 94,
Wow. Yeah.
because you won't see a seller concession on that. Where they take their concession is straight off the purchase price.
Right. Exactly. Because if you're paying cash, what's the difference, right? Um, Actually, Tina was telling a story yesterday about how she saw a cash transaction with 2,000 in seller concessions. She's like, "This makes no sense to me. Like, why didn't you just take 2,000 off the price?
Right.
Isn't really not registering."
Well, and
Um,
it's funny because sometimes it's just the seller gets stuck on a number. I've seen it.
sure,
They
sure,
just want that number to come up in MLS. So if somebody searches, they know this is how much I sold my house for. Forget that I gave a concession. I
right.
got that number.
Yeah, and that's hard for people to get their minds around too. When I'm talking to buyers, especially young buyers, like when they're talking about how they construct their offer, I'm like, you have to remember, most sellers, they just care about what's the net. How much money am I getting from selling this home? Whether it comes in a lower sales price or concessions, the same amount of money goes in their pockets.
Right. Right. And I think some people, I think maybe coming off of the market that we just had, feel like, well, if I offer list price and then put the concession in, they'll get so like, ooh, but I'm getting list price. It's like, whoa, whoa, whoa. You're not getting list price.
Right.
You got to take off the concession. And
Right.
again, to your point, like it's what's going in my pocket at the end of the day.
Right. And I think a lot of listing agents, experienced ones, understand that, because I've seen a couple, lower producing realtors that aren't accustomed to pricing strategies. They aren't baking it in where there's going to be a 2-1 buy down or something.
Mm-hmm.
And I can have the most qualified borrower with an 800 FICO score and good income. And it's like, hey, they're willing to pay full price, but they need a 2-1 buy down. They need 2%, 2.3%, whatever, to make this an affordable home for them.
Right. And therefore that's the concession.
Right.
To get that 2-1 buy down. Right. Exactly. Yeah. What are some of the challenges that you're seeing right now with lenders, besides the fact that the interest rates are higher?
Yeah, I'd say really affordability. I mean, technology is amazing in our industry. I mean, and you're going to continue to see AI tools not replace underwriters or loan officers, but more or less help facilitate. There's too many moving parts still. But all these web-based platforms are just improving by the day. Underwriters are going to still make mistakes, right? Income can still get quirky, especially with people that are self-employed. Sometimes it's, storytelling and explaining how we got to that number and why it makes sense. But unfortunately, home affordability just towers above it all. I mean, home affordability is just a huge issue. And, my mom was a school teacher growing up, and for an Arizona school teacher, single income, to own real estate here has become a huge challenge. And that's really a shame. It's really
It is.
sad
I agree with
we
that.
have, whether it be a teacher, firefighter, public service, it's getting to the point where, people that don't make $100,000 can face some challenges, to have an affordable payment.
And again, back to kind of what we talked about a little earlier, I think that is one of the reasons that it's driving more people out to the outskirts of town.
Yeah.
To Queen Creek, to the Buckeye, to, I tell people this all the time. I'm like, if you can buy in North Peoria right now, buy. That place is going to explode because of TSMC. It's going to explode.
Oh, you're talking about the plant, the chip plant? Oh, yeah, all that.
Taiwan Semiconductor. Yeah. I mean, it's going to explode.
That you can see from space.
Yeah.
Places.
It's going to just get even bigger.
It's insane.
Yeah.
And, touch on one other thing, sorry to go back, but when you're talking about challenges, remember too, is that besides increased mortgage payments, you have to remember too, and it's coming to light obviously this week because of, prayers to all the people in California. But you're seeing home insurance rates skyrocket. You're seeing HOAs for condos go in default. They're having to raise their fees significantly. And all those things are also going to have a pretty big impact on the overall housing payment as well.
Yeah. Well, thank you for bringing up the fire over in California, because I mean, I'm from Southern California. I didn't grow up in the LA area, but I mean, that's really scary, super scary. And I've got some clients that are over there, and I've texted them to just check and see how they're doing, and they've been evacuated, but they're all safe. And they're like, that's all I care about right now. Which I'm grateful for. But I have other clients that are now saying, where are all of those displaced people going to go? Where are those families going to go? There's not enough rentals in California to handle them. Are they going to come to Arizona? And now are our home prices going to start rising again?
And we've always seen, the last number in my head was something like our annual migration patterns are something like 37 to 40% are from Southern California. So,
it's
they've
always
already been a huge portion of the people that come to Arizona. But, maybe we'll see increases in that number. I always like to do the go on the U-Haul and do the one way and see what it costs to do a one way. And it's always like at least 4 to 5 times the cost to do a one way
Yeah.
New Phoenix versus from Phoenix to LA or San Francisco or something like that.
Yeah.
We are a destination spot, and the numbers we showed earlier kind of project that as well. Is that, hey, maybe we're pulling up some other areas of the country and we're not seeing that appreciation that we saw in the last 12 months, even though we're not in a boom in terms of real estate, right?
Right. Well, and I mean, to that, to the inventory, right? What we talked about earlier, it's that we have inventory coming.
Mm-hmm.
The problem right now, I think, with our inventory is that when a really good house comes on the market in a good location and all that stuff, it goes straight back off the market because people are sitting there waiting. And so the inventory that's sitting there is less desirable. It needs some work, all of that. And so that, I think, is the part that's frustrating to people because they come, like I've got a few buyers, they've come, we've looked at some houses, I know what they want. It's just not out there. So I see things coming or price reductions and I start looking around and doing my digging and things. And it's hard because some of the inventory that's out there, it's not updated, or it is updated, but it's kind of lipstick on a pig. Right. And it's not, again, all those big things that need to be done aren't done yet.
Yeah. And historically, on Tina's presentation yesterday, she was talking about this, is January for the luxury market. That is when you see the most new listings to market.
Yes.
So if
because they all take them off during the winter.
So if you are in the market for a luxury home and you do have something very specific, quite possibly over the next 3 weeks, you might see the most quality luxury homes on the market that you'll see all year.
Yep. It's the truth. They put it on the market. They take it off the market when it's hot.
Right.
If they aren't going to come and use their house in the winter, then they might pop it on in October, November, then they take it back off.
Right.
And then they put it back on in January. And sometimes they wait. I feel like, I don't know how you feel, but I was in Costco like 2 weeks ago, right at the beginning of January. And it was like nobody in Costco, they were all here for second homes and they were all stocking up their house before all their friends started to come to visit.
Yeah. That Costco in North Scottsdale is insane, by the way.
It's crazy.
I don't even go to that one anymore. It's too crazy.
I just know where everything is there, so it's okay.
Yeah, fair enough. But no, and to your point, yes. I mean, although a lot of homes aren't flying on the market, the good ones still are.
Mm-hmm.
And that's important to note, is that, I'll see people where I know they're going to be well qualified, but maybe they own a company or something like that. And I'm like, just get all your paperwork knocked out, right? Maybe not every single detail, but like, let me see the tax returns. Let me see the basics. So let me give you that peace of mind. So when it comes to writing that pre-qualification letter, which is required in Arizona, that we don't have that issue, because if you're in luxury, that house could pop up and you're not going to have a week to work on that stuff.
No, you won't, because I mean, I'd say like the last 4 houses that I wrote contracts on, it was like the one that I got in December, the 2-week cash close. Like we got that right before another offer came in, and it wasn't even on the market yet. It was coming soon.
Wow. Yeah.
I mean, and the agent called me. He's like, it's a good thing that you got that in when you did, because the agent just called and said, I'm working on an offer. And he said, we just accepted an offer. Nice. And he was like, what? But when you're in this business for that, for this long, you just kind of know too. It's like, and I'll tell them, I'm like, look, if you really want this, we have to move fast. If you don't, right. But this is kind of, I just know what's going to move. And we got to jump on it.
Yeah. And that's not just a luxury either. I mean, see the same thing at 400, 500,000 price point.
Absolutely.
You might have a quite reasonable seller. You might have somebody where there was a death in the family, a divorce situation, things like that, where people just want to move on, get on with their lives.
Right. Right. Which is the reason why in December, oftentimes it is the best time to buy, because people just want to take whatever house it is that's on on the market and they want to put it behind them before the new year starts.
Yeah, I have several January closings that were from December, and we got 2-1 buy downs on pretty much every transaction I did.
That's crazy. That's crazy. Yeah, which is great. I mean, it's good for the
Yeah.
buyers out there. It really
It
is.
is. They're thrilled. I mean, they're thrilled, and depending on what life is dealing with them, like I had one where she's getting ready to go on maternity leave, so like she's going to be a single income for a while. So that 2-1 buy down is just such a big help to their family. They're not. It's going to take away a little bit of stress.
Right. I know it. I've seen that. I think one other a deal that you and I did together earlier this year.
Mm-hmm.
Same thing, and it made it so.
Yeah, we had a single mom
Mhm.
and needed to be in a certain area,
Mhm.
which just unfortunately a higher price point with a decent sized HOA. Like
Right.
we have to figure out how to make it work.
Right. Which is good.
Yeah.
Well, I think 2025 is going to be interesting. I think that it's going to be a little bumpy. I think we're going to have some ups and we're going to have some downs. But the majority of our real estate in Arizona is sold from now until April or May.
Correct. I think there's going to be, if you work with professionals, I think there will be immense opportunity for people.
I agree. And it's one of those things I kind of talk to buyers about when they're explaining to me what they want, and then sometimes their price point, and I just kind of know they're right on that edge. And then I always ask the question, are you willing to do work? And their comment to me usually is, well, define work. I'm like, well, what if you just needed to like paint some cabinets and paint some walls and do some cosmetic things? You're like, well, I think I'd be okay with it. I'm like, okay, then I think we can probably find you something that is going to be okay, because that's where the deal is.
Right.
But if you need it,
really want to sell, or do you want to sell?
Right. If you want the house that is all done and you don't have to do anything, then you're still going to pay top dollar for it. And that's one of those ones that I go, oof, we got to move fast, because if we don't, somebody else is, and we're going to miss it.
Yeah. I've seen it myself in the central corridor with a couple of people. Like there's certain people that they want to live near a certain school, certain area. And, just again, some areas where you're just not going to see a lot of inventory probably for a long time.
Well, and I think that is what people notice maybe the most, is that there is inventory, but sometimes where they want to be, there's not. Like where in my neighborhood this last year, everyone's like, oh my gosh, the inventory is up. Not in my neighborhood. There, out of 4,000 homes in the neighborhood that I'm in, I think there were like at any one time 22 houses on the market.
Yeah, that's a really small number.
Crazy low.
Yeah.
Crazy low. So it'll be interesting this year, because I think we are starting to see some more inventory come on the market, because some of those people that were claiming that locked in effect are making that decision to, hey, look, I'm just going to move. I just need to bite the bullet. I just need to do it, and I can afford it. And interest rates will come down eventually. When, we're not sure. They will come down eventually, and at that point I'll refinance.
They will. I think we'll probably see a little bit of clarity in the next 30 days or so, as we're in that, political transition period.
Yeah.
We'll probably get a little bit back next month with the new jobs numbers from January. And as we see inflation, if the core inflation's in the mid twos, that's still pretty low inflation. So,
well, I mean, when it was in the core, that was when Powell started lowering it, right? When it was in the mid twos.
We were, maybe like 2.6, 2.7.
Yeah.
So he was projecting that inflation, the recent trend is down. And, we'll continue to watch that. So we're not giving up hope, people. We're not giving up hope.
Never give up hope.
It may take a few months. And in the meantime, just continue pulling the same levers we've been pulling, trying to get, trying to get a deal, work with a professional, get your offer in quick, maybe get a buy down. There's definitely opportunity.
Absolutely. Well, Matt, Happy New Year.
Yeah. Happy New Year.
On to 2025.
Let's do this.
I know. It'll be good. Thanks, everyone. See you next time.
Have a good one.